morning, everyone. We will start the morning call. The monthly US consumer prices unexpectedly rose in August as declining gasoline prices were offset by gains in costs of rent and food, giving cover for Fed to deliver another hefty interest rate increase next Wednesday. US August CPI inflation came in at plus 0.1% month on month versus expectation of negative 0.1%, and previous month it was flattish. Year on year also it remains sticky at 8.3% for August compared to 8.5% for July. For weeks, investors have been debating whether the full extent of Fed hawkishness had been priced into markets after the central bank already raised rates by 225 basis points this year, with many penciling another 75 basis points rate hike next week, and some even expect a 100 basis points increase. The reaction in markets has been very swift, with Dow falling 4% and Nasdaq by 5%, the biggest one-day drop in last 2 years. Asian markets are also down around 1.5% on an average today morning. I will now hand over the call to the technical team.
Yes, thank you, Jihan. Good morning, all of you. This is Swati. Looking towards the Asian markets, our Nifty is likely to open with a gap down at around 17,777,800 levels. And for the today intraday purpose, the immediate support is placed at 17,740. If it's break that level on the closing basis, then the selling pressure is likely to be intensified, which may extend this falls towards 17,600 to 17,540 levels on the downside. Whereas on the flip side, 17,900, 18,000 will act as a crucial resistance zones. As long as it sustains below that level, no major pullback rally can be witnessed into the market. Coming towards the Bank Nifty, for today intraday purpose, the support is placed at 40,400. Below that level, 40,000 levels can be seen, whereas on the high side, 40,800, 41,100 levels are the crucial resistance levels. The overall view on the Nifty and the Bank Nifty will remain cautious. We not suggest to create any major long positions. Let the indices settle down at the support levels, then we can witness some kind of a reversal. Then we can witness some positive momentum from the support levels. Coming towards the Nifty Finance, 18,100, 18,170 are the resistance level for the Nifty Finance service. Support is placed at 18,000 and second support is placed at 17,940 levels. That's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. On the derivative front, majorly, there's not much change. Actually, the data is still positive. The only thing to note down here is the PCR. The PCR had gone up to 1.4 odd, which is the overbought zone. So there is, this likely selling that is coming. But again, 18,000 put has a considerable amount of open interest built up after the move yesterday, and more or less it is likely that once we open down, we will witness a good bounce. So I believe one should be buying on the dips. There is good support at 17,900, 17,800 put strikes with good amount of open interest built up. So, a bounce is expected at this point of time. Again, if we manage to close above 18,000 again today, we will see a further rally coming in, which can take the index higher towards 18,300, 18,500 odd levels. So look out for the same. The VIX has also come down yesterday, even though now, with the open, the VIX will shoot up for a bit. But again, where it closes is very important. So, all in all, the data is still positive, and we expect a bounce back for Nifty soon. From the stock specific front, the IT sector stocks are the ones which look the best at this point of time. Most of the stocks will open down, but IT sector is likely to witness good bounce back. And lot of stocks have shed short positions in the sector. So Infosys, Wipro, Tech Mahindra, TCS, all of these might witness a very good bounce. So look out for the same. That's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah, good morning. JSW Steel has signed a MOU with the German-based engineering and tech company SMS Group for exploring solutions for implementation of decarbonization projects across the company's plants in India. JSW will invest 10,000 crores to bring down GHG emissions, that is greenhouse gas, to less than 1.95 ton of carbon dioxide per ton by 2030. This is neutral for the company. Thank you.
Good morning, everyone. Infosys CyberNext platform and Palo Alto Networks has strengthened Belgium post-security posture as a part of the cloud transformation journey. This is positive to Infosys. Thank you.
Yeah, good morning. KEC International has won new orders for 1108 crores across various businesses. That is positive. Bharat Forge has joined hands with US-based Harbinger Motors to form a joint venture focused on developing electric drivetrain solutions for the CV market. This is also positive for Bharat Forge. And there is one IPO opening today, Harsha Engineers International Limited, and it will be closing on Friday the 16th. Price band is 314 to 330. Total issue size is 755 crores, constituting fresh issue of 455 crores and offer for sale of 300 crores. Post listing, the market cap will be about 3,000 crores. Business model is very similar to Rolex rings. Company supplies one particular part of bearing to companies like Timken, SKF, Schaeffler, and other global bearing companies. If we see a bearing, typically it is made up of 4 basic parts: inner ring, outer ring, which are made by Rolex, and then there is a cage-like structure between these rings, and within the cage there are balls which rotate. So Harsha makes these cages in which the balls rotate. So this is a very high precision job. Harsha has more than 50% market share in India and 6.5% global market share. Bearings cages is 75% of its top line, while remaining 25% comes from other small segments like stampings, castings, and solar EPC. In cages and stampings, the company makes EBITDA margins of 21%, which is in line with all other bearing companies and even Rolex. However, around 11% of its top line comes from castings which are made in Romania, which have low margins, and around 6% of top line comes from solar EPC business where the EBITDA is negative. Both these segments pulled down the overall margin to just 13% last year compared to 20% for peers. However, overall, we think that Harsha is a proxy play on rising global outsourcing of bearing components from in-house facilities of all global bearing companies, giants who are present in Japan, Europe, US. They are shifting their all incremental capacity expansion to countries like India. Also, there is a relocation of global supply chains from China to India, and strong upturn in domestic industrial and auto segments is reflecting in a strong growth outlook provided by bearing clients like Schaeffler and Timken in India. So all these points are the positives. Also with increasing utilization rates from 62% last year to 75% in current year, and turnaround in the solar EPC business and also debt being repaid, we expect ROCE to improve from 17% to 20% plus in next couple of years. We believe investors have yet not fully appreciated the quality of business, industry positioning with industry leadership in India, and cash flow generation of these niche bearing component suppliers such as Rolex and Harsha Engineers. Harsha is being offered at a 70% discount to OEM bearing companies, and we think that there is good scope for re-rating at such cheap valuation at around 15 times FY24. We recommend subscribing to the issue. I will, anybody else from the fundamental team? Fine, the commodity team can take over.
Yeah, thank you, Jian. Good morning, everyone. Yesterday, we witnessed a sell-off in commodities after the US data. Going forward today, we feel that a pullback may come, but however, we should be cautious So gold can bounce back till 50,350, 400, which is a immediate resistance level. So again, selling can be done from that levels. Again, the price band of 50,000 to 49,700 is a major support area. So prices can test the support area, but however, buying can be done for a pullback if prices closes above 50,000, then one can carry the position, else should avoid carrying the long positions. Silver also pullback till 56,800 to 57,000 is expected, and again one can sell with a stop loss of 57,500. Prices can test 55,500 to 55,000 on lower end. Crude oil, we expect prices to bounce back. 69,000 sorry, 6,900 to 6850 is a good support area. So prices can pull back. One can initiate a buy with a stop loss of 6830. Prices can test 7,000 to 7,050 on higher end. Copper, we could see a range of movement from 648 to 57. However, if one can sell at 657 with a stop loss of 662. Zinc, we have witnessed 284 as a strong support. So unless it is broken, we recommend to go along with a small stop loss below 283. Again, prices can test 287, 88. 288 could be a level where one can go for short with a stop loss of 290. NG also looks positive, should rise. 650, 55 levels are good to enter. One can maintain a stop loss below 642. Prices should test 670, 75 on higher end. That's it from me. I would request Ria to take over from here.
Good morning, everyone. So on the currency front, well, US inflation data released, and it instead of what we were expecting that it will cool off at around 8%, it jumped to 8. It accelerated for the month of August towards 8.3%. So this means that a 75 basis rate hike will be on the cards in the next Fed meet. This pushed the dollar index on the higher side as well, where it relaxed towards 108 levels. It accelerated overnight after the inflation data towards 109.76, 77 levels. So this will be impacted in today's open as well. We are seeing the cross currency pairs opening on a weaker tone. And the same is reflected into the GBP INR and Euro INR as well. USD INR has opened at 39 paise high. Take into consideration that there will be more hawkish stand that could be taken by the Fed. 79.70 is a very important resistance in the pair. It is where the long-term SMA is trading at. So if the pair gives a breakout to 79.70 levels, it will again head towards the level of 80, 80.10. For other pairs, I think one should go for a short. JPY INR has opened with quite a gap down at 55.30 levels. Wait for the price to get stable. 55.30, 55.38 will be resistance in the pair, whereas 55.13 will be the support. For Euro INR, every 79.60 is the resistance in the pair. If it trades above that, it will come towards 80.14, 80.25 to cover up the gap down. If the price gives a breakdown to 79.50, it will head towards 79 levels. For GBP INR also, it has opened with quite a gap down, 91.76. 91.63 is the support. 91.88 will remain as resistance. And break out of that should trigger the the momentum towards 92.05, 92.25. So follow all the resistance and support in today's session, because every pair has opened with quite a gap down. So it could come towards the resistance in order to cover up the gap down that it has witnessed in order to get the price stability. So follow the support and resistance in today's trading session. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.